What's going on, guys? It's Andrew and Eric here, and today we are joined by the man, the myth, the legend himself, First Home, Ryan Kurrle.
Thanks for having me, guys.
Yeah.
Glad to be here.
What's going on, man?
Nothing much, just enjoying life, you know?
Perfect.
It's the only way you can do it, right?
Oh, yeah.
So today we're talking a little bit about mortgage programs and all the pros and cons to each one that's out there, and just diving in a little bit on those. So, shall we?
Yeah, definitely.
Cool.
Definitely.
So, typically, first-time home buyers especially will use one of two loans, like an FHA or conventional.
Correct.
Talk to me a little bit about each of them, just like a broad overview, and then what does each one mean?
Of course. So one of the big differences with conventional and FHA, when you put less than 20% down on a conventional loan, there's going to be mortgage insurance.
Sure.
For an FHA loan, there's going to be mortgage insurance either way. With conventional, that mortgage insurance is going to drop off after you have 22% equity in the home. They'll automatically drop off.
Oh.
You can request to have it drop off at 20% equity. But you gotta get an appraisal and stuff, it can be a little complicated. With FHA, that mortgage insurance is gonna stay there forever.
Sure.
So usually, like the sweet spot is someone with a credit score like 740-ish and above. You're gonna always go conventional pretty much.
Okay.
FHA, get lower credit score.
What's the lowest credit score you can have to be applicable for that?
We can actually go down to 580.
580?
And that's gonna make sense for FHA loans. Conventional, that wouldn't make sense.
Cool.
Yeah.
Cool.
Awesome. Can you talk a little bit about mortgage insurance? Because a lot of people are like, what am I paying this for?
What is mortgage
Right,
insurance?
of
Yeah.
course. So the mortgage insurance is something that's put in place to protect the lender in case of like default on the loan. So, back in the day, you would have to put down 20%, and that's really all there was. So then these companies went out and created mortgage insurance. So they're different from the lender, from the servicer of the loan. They're their own entity.
Sure.
And what you're doing is you're paying them to pretty much back your loan, because the whoever the servicer is, they're only going to back your loan to a certain percent. So the mortgage insurance company kind of covers that extra bit of equity that you have there. Yeah,
Delta in between what you owe and what they cover you for, right?
exactly.
Okay.
Pretty much.
Cool. So, in your experience, what are some of the best mortgage programs out there for first-time home buyers? The easiest to get into, the ones that you're doing the most, you'd say.
Right. Yeah. So there's so many different scenarios and different factors that play into it. The best mortgage program is going to be the one that fits your needs at that specific time.
Boom.
Yeah. So there's not really like it's not black and white. It's
Yeah.
not like this is for you at this point in
Definitely
time.
go here,
Sure.
over there.
Exactly.
It's
Exactly.
different for every person, right?
Exactly.
Every situation.
And one of the big factors, like I said, is credit. You're a bit on the lower side, we probably can go FHA, but on the higher side, we can go conventional. In terms of programs, were you thinking like grants and stuff as well?
Yeah.
Sure. So there's actually a new grant out there for conventional loans only.
In Maryland.
In Maryland, correct. It's a Maryland program. It's actually valued at a 6% grant.
Okay.
The income limits are kind of low on it. It depends on the county. But I mean, you can cover your full down payment and all your closing costs with a 6% grant.
Wow.
That's
So you
crazy.
come to the table with little to nothing.
Mm-hmm.
So what does that do to the interest rate?
So the interest rate's going to be much higher. I think
Like
today
what?
it's at 5.75%.
Wow.
But there's kind of a trick there that you can refi after 6 payments.
So 6
So,
months.
Probably about 7 months.
7 months, and you can refi and go from there.
Mm-hmm.
Gotcha.
So then you can refi back to that normal FHA
I've
loan
always
at
been-
the lower interest rate.
Gotcha. I've always been curious, like, how much does a refi cost somebody who's refinancing? Is it free of charge, or is there fees along with it?
There is fees along with it. It's not going to be as expensive as a purchase, of course, because a lot of those fees aren't going to be the same.
Yeah.
The thing is that you're going to have equity in the property. So you can use that equity in the property to kind of pay for the refinance. So a lot of times what we will do is structure the refinance to cost as much as a monthly mortgage payment. So you're coming to the table with what you're used to paying every month for your mortgage payment anyways.
Okay.
So it's not really going to change that much, and then you're bringing that monthly payment down by quite a bit if you're in one of those down payment assistance programs.
Cool.
Nice.
Huh.
Nice.
Yeah.
Those are all the questions that I think I have, really.
Yeah. And then is there anything similar to that in DC? In
In
terms of
DC?
zero payment or
Sure.
zero down to get in?
Right. So DC Open Doors is a big one out there. So they have 100% financing, which means they're going to cover the full down payment. So for FHA, they have a 3.5% grant. Or actually, it's down payment assistance, so it's a second lien on the property, but it's 3.5% because that's the minimum down payment for FHA. And then conventional, they have a 3% down payment assistance program.
Awesome.
Mm-hmm.
Are all down payment assistance programs technically liens, and the grants are all forgivable?
So
Good question.
yes, they're They're either a grant or a lien, so the grants are going to be always forgivable.
Okay.
The time period sometimes changes, so like that 6% grant, that's forgiven immediately. There's some grants that are forgiven over time. Really just depends on the specific program.
Okay.
Even with the down payment assistance, they're going to take like a second lien on the property.
Cool.
Cool.
So how will we contact you if we want to get a loan from you?
Of course, yeah. Just give me a call on my cell phone. You know, I don't mind. Anybody can call me at any time. Cell phone number is 443-504-7152. If you want to shoot me an email, if that works better for you, it's going to be rkurrle@firsthome.com.
Awesome. Well, hey, Ryan, thanks for coming on today. Guys, if you have any questions about mortgages or any down payments out there, drop them below. Feel free to hit him up. He'll hit you back. And that's about it for today.
Of course, yeah. Thanks
Awesome.
again for having me, guys.
Sure.
Sweet.